Good morning. Good morning. Welcome to another pre-market report live stream. We got a lot of talk about today. The dollar, the markets, so what happened yesterday, etc. Yesterday, I think it was a very emblematic day because the Fed not only sustained his tone, but I think they pulled out a report that was a lot more truthful and realistic, so people can understand better how the things are right now and how the things are going forward. Okay. Like always, I like to start with the economic calendar. So, give me 1 second. I gotta put myself here on the pre-market. All right. I didn't do it on time, though. That's fine. All right. So, I won't be in the picture though because I didn't prepare. All right, give me 1 second. Oh, there you go. I got it. So let me do this real quick. There you go. All right, so this is the economic calendar for today. We did have a few European reports coming out and members talking today, but the big news today was the jobless claims. Came better than expected. I think jobless claims is a number that hasn't moved lately, right? And actually the Fed, this is what they are aiming, right? Raising this number. They want to get this number higher. Then later today we have a couple of reports coming out, natural gas storage inventories, and we got nothing else. 10-year tips. For those who don't know what is 10-year tips, tips stands for the Treasury Inflation Protected Securities. So this is a bond that is supposedly protected against inflation. So we can have some inflation expectation numbers off of this bonds auction. Okay, let's review tomorrow if we have something. Well, Powell's gonna speak tomorrow at 2. All right, so with that, let's go to the dollar chart, and this is the U.S. dollar chart. It's coming down today a little bit. My personal opinion is that we need some sort of breathing here with the dollar. It's up almost 20% for the year. It's really hurting trades around the world, and the economies are suffering because of this. Higher dollar makes everything more difficult in the trade scenario, right? But regarding today's trading session, I would like to go down to the 30-minute time frame, and here is the low from yesterday while Jerome Powell was in the press conference. We held here at 4:30 after London, but we're trying to push a lower. I do have few areas that I like a lot, and are this ones, right? And I want to pay attention to these areas today. Okay, so we did have some of them draw already. But yes, let me get rid of this one. I don't think it's relevant. I think the most important area, I know is far, but it can come into play next week, is 109.09 right here. If we breathe a little bit. If not, we can account for this bounce right here. Coming right here. And the equity markets are basically flat. They're not going up, even though the dollar is dropping a little bit today. The equity markets are not going higher, and that tells me that if the dollar bounces from any of these areas, which are very good areas to trade from, the equity markets have more downside. Okay. All right. So that's the dollar. The dollar's dropping while the equity markets are not moving. That's not a good news for the equity market. So for that, from that side, I think I am leaning to the bearish side of the market today. All right. If we see the rates are going up, so is kind of like a mix back here. Dollar down, rates up. We could have a sideways day today. If the rates turn around and start to go down, let's go down to the 5 minute. So we haven't broken the 725 high. This is important high. If we don't break this one, 575, we could expect lower rates today, and the target will be 516, right? If this happens and the dollars continue dropping, then a long in the equity market is a possibility today, right? If we just sustain this rally-based rally, or this pivot right here, if we hold this pivot, we could have something like this, along with the dollar in demand. That's very bearish for the equity markets. But for now, I do think the scenario can play out like this. One scenario can be we come back down here and then we go back up, right? Or we come back here, we go back up, right? So those are the two likely scenarios for me. I don't think rates are dropping anytime soon. And if you check here, you have a lot of demand, right? Like this one is a pretty good demand created on 21st. This was Tuesday. Okay, yes, I know we haven't broken to the upside, but there is a good possibility that we hold this pivot right here. All right, let's keep going. Let's go to the VIX chart, because the VIX chart is very interesting. I have talked about this a lot. This chart looks very messy. If you see here, is not like a very common behavior that we're having right now. But well, if you look this picture backwards, like if you flip this picture, it looks similar, but not quite the same, because we haven't broken to the upside, even though the markets are broken to the downside. Like looks how far we are from June lows. So June lows is 35 1/4, and we are at 27. That is like 30%, right? Upside. Whereas the market is probably close to the lows. NQ is probably 4 or 5% above the lows of June, right? So this is a chart that tells me two things. Either the market is not going to drop, or investors are not ready. Investors are not panicking, right? If you get more like fundamental and you see Jerome Powell speaking yesterday, you can say that we will have some pain ahead. I'm not talking in the stock market, but the economy, right? But if the economy suffers, that means earnings suffers, right? And I don't think Wall Street has priced in an earnings recession. They have priced in a lot of things, Fed hawkishness and so on, But an earnings recession, I don't think nobody's expecting that. We'll see what happens. So, but this chart is very interesting for today's trading session. I do think we are in a very important spot, and if we open to the downside, we can have a breakout to the upside here. It's really in reality is in a channel, like it's been here since the 13th of September. We broke to the upside yesterday, but for very short period of time, and then we came back down, but then later we are settling here at the highs. Let's see if we can have more upside here. Okay. I don't use the VIX chart for my day trading strategy, but I want to see it pre-market and see if somehow I see this thing going nuts, then yes, I get some information during the day. But in reality, this is a thing that derives from the stocks, so I don't want to lean on this VIX chart at all times. All right, let's go to crude oil. Crude oil hasn't broken the demand, still working. Now, the more time it spends close to the demand, the less likely that is to work. Now is working, and we'll see if we have a double bottom here. So that will mean higher crude oil prices for a longer period of time, because this is a daily chart. So if we have a double bottom here, I think 82 is a very important demand right here. And if we happen to break this 90 point, then yes, we will have probably 105 again. That's not good for inflation though. All right, if we want to review certain commodities, gold is going up 1%. Let's go to silver, SI. Silver's future, there you go, is going up 2%. Lumber is down and copper is up today. A lot of them depend directly to the dollar chart, right? But look at the dollar is dropping, the gold is going up. That's very straightforward. Okay, they're all priced in dollars. But crude oil is going up. Well, it's going up and the dollar is going down. So yes, it's a more coherent move. All right, let's go to the ES chart. All right, so this is the movement that we had yesterday with the Fed news. Here is a very, very important point. Do you see this green line? We have, let me get rid of this. So we do have new break and retest pivots. 1, 2, 3. All right, so we do have these 3 pivots here. If prices come back up around 38.45, I think it's not a crazy idea. It'll be around like 1%. Let's see if we can get here. And we go down to the 5 minutes. If we go down to the 5 minutes, we do have this beautiful pivot here. It was tested today at 4 in the morning, but I do think this is the real deal. Let me get rid of this. All right, we can go and have a retracement up to this point, 38.55. But actually the more important point right here is this, right? I want to see this candle holding, right? Why is that? I don't want a solid breakout to the upside, because if I have a solid breakout to the upside, I have the risk of this thing. If we scrunch this a little bit, when it comes down, a lot of buyers are gonna show up right here. Okay, so I want to pay attention to this. I would prefer that the prices just come here and start to reject, and the tick chart and the ADQD show a lot of weakness, so we can short from here. I am biased short because of the dollar is going down and these equity markets are not going up. That is not usual. When the dollar drops, they usually go higher, but we can probably interpret this as a more weakness going forward today. Okay, always. I'm not stick to my bias along the day. If the tick chart and the ADQD and other internals or the dollars turn around or the dollar starts to collapse, I will lean real time on those enhancers for my trading. All right, so this is the chart for the ES. Now I didn't draw any demand on the ES, but we can go ahead and do it together. Let's go up to the 4 hours. I want to see what the 4-hour charts. I want to see the big picture, right? Because either you want it or not, this is a very bullish pattern here that was created in mid-June and beginning of July, right? This is a very, very bullish pattern, and I want to really to pay attention to this because this might be or might not be the bottom, right? So I don't want to short right in front of demand. I want to be aware of that. If we want to really check where the demand, high quality demand is, so I'm looking for two things: volume, right, where the volume was traded, and a explosive candle to the upside, right? So if I want to see the volume, right, I don't need the volume right here because I know the volume is on the from the candle from 9:30 a.m. to 10, and then from 10 to 2. This is a 4-hour, right? So I wanna have something around between 9:30 and 10:30, 11 max. Okay, so let's go check for this. So 10, you have an explosive candle. So let's mark this one off. This is more like a retest because we do have formations close here to the left. So I want to see if one of these candles were created around that time. So 10, 22, no. 2, 10 is right here. There we go. So I have 10. So I do have this one. But I do have this retest right here. So if I open up the chart, right, I do have this 10 a.m. candle, 4 hours, and then an explosive move. Well, not an explosive move. We do have some sort of like slow movement up, but then on the retest, then yes, we do have some explosive moves to the upside, right? Then here, sellers tried to push the price down, and we didn't manage to go lower. So I do think that 374 is gonna do something, but the big deal is 3713. So that's my 4-hour demand. So we got here overnight on this one, right? And we're starting to go back up. Now, like I said, is this the real demand? For me, is not. This is just the 10 a.m. candle, right? The candle that closes at 10 a.m. I need some sort of retest. Here we do have a retest, but it doesn't retest this candle. So I wanted to test this candle. If I want to go lower in time frame and see what happened here. How do I do that? I just go to the 30-minute. In reality, I like to see the 40-minute. For the 4-hour, I like to go down in time frame for the 40-minute. I divide it by 6 though. All right, so here you have something. There you go. So here you have it. Is this is 11 and the retest. Then you have this. did not touch here. So I want to scrunch this. I got nothing to do with this zone. If I scrunch it to the downside, I will have, okay, I can use this one, but also I have this one. I have to include this one because the this is the one that this is 11 a.m. So for me here, I don't have the retest touching this one, so I cannot scrunch the zone. So the most I can do is this. All right, but still a big area. I'll have to keep going. Let me see if we, okay, we haven't gotten here yet. Okay. I think this area is likely to be in play today. Although, like I said, this is not the best one. The areas, the real areas are to the left where the retests were created. So here is just a consequence of what happened here to the left. So I want to lean more in the 37.13, and still we need to have momentum, because if we I can do that on the live stream with NinjaTrader. I don't have my platform on right now, but we can go ahead later in the later in the stream. If you remind me, I can go ahead and put the volume, the horizontal volume here, the volume profile, right? And see where the higher volume is, because I think here, if you see, like, if you just calculated, you eyeball it, right? If you eyeball where the volume was traded, you can see, like, here you have a lot of volume, here you got a lot of sideways, here you have a lot of sideways, and here you got a lot of sideways, right? Around 38.08, okay? So this is where the majority of volume was traded. If we happen to trade below and we break below and we go back to retest that volume spike, or the volume, the POC, the point of control, those sellers are going to be underwater. They're going to be losing money because the majority of the transactions were here. Okay, so that's a consideration that you have to take, right? And that is how my theory about the break and retest strategy, or the formations and retests happens. Okay, all the traders that were on the water are just bailing out their positions, and I want to pay attention to this demand. If this thing reacts to the upside and we have some choppy movement around the POC, we can expect more a downside. Okay. All right, but those two are my demands for today. Let's see if we can get there. All right, let's go to the NQ chart. Oh, I had it here, but that's fine. Very straightforward. The demand that we had here is acting as a supply right now. If we go down in time frame, now if you see me trading, I like to trade the NQ on the volume bar. If you see here, NQ is more like into the weaker side of the market, because on the ES we got to this 5-minute doji right here. We didn't get to the supply on the NQ, so I think this is a fresh supply. Let's wait for it to work today. If you guys wonder why I chose this one, I have this pivot, this drop, base drop, and they quick retest on the next 5-minute candle. Okay. To the long side, I don't have anything but here, 11,397, although the overnight low is going to be a very important point to trade off. I don't like to short before. I won't be shorting close to this overnight low, because we turned around such a bearish momentum from yesterday. Okay, I know markets breathe and we can have a straight move down, but that's not me. If that happens, cool. I won't be taking any sort of breakouts to the downside. We're too close to demand. One thing that has gotten me better this is my experience, doesn't have to be yours, but this is my personal experience, is just wait for the right setup. When this thing is moving without you, I know it's painful, I know it's hard to do it, but that's what you need to do. You need to wait, right? If you didn't get the right entry, please stay away. Wait for the right setup. And those words are for myself too. Don't think that I cannot do stupid shit like we're all doing crappy things sometimes, okay? All right. Yeah, let's be patient. We can be patient together. Like, if you bear with me the entire live stream, I will be patient as hell. I mean, it's very painful, but it is. All right. Let's go to the Russell. Russell is I would be saying this. We hit the demand here. The Russell, it has the most bullish scenario. Has the most bullish scenario of all equity markets, which is impressive because and this correlates to inflation expectations. Like, inflation expectations are down, right? And the Fed wants to act before those inflation expectations go up. And if you think about small and medium business suffer the most with inflation, but they're not expecting high inflation. And this chart tells you that the Russell is more bullish, right? Meaning hasn't dropped as much as the NQ or the ES, right? If you see here, we haven't gotten to the lows. Like the ES, this is the exact same picture, right? But the ES is around these levels. Do you see that? It's like probably like 3-4% below. The Russell is holding a lot better. Now, all these demands were violated in the other equity market, so I do expect at some time that the Russell will turn weaker. Okay. Yeah, no worries. I want to go over real quick, and I won't spend too much time here with the Apple chart. I think Apple is a thing that we need to review at all times. Apple was going up, and yesterday with the Fed meeting, we held the trend line. So I think Apple has the potential to keep going down. I do have this demand created a few days ago, but I do think that right level for Apple to turn around is 143. This is the daily chart. We do have this pivot right here. Very straightforward. We broke to the upside, retest, and continuation. Okay. So this is a point 144, around 144, where I'm looking to buy Apple right here. Okay. All right, I think that's all for today. It's 9:13. I'm gonna make a coffee and come back in probably 10-15 minutes. 10 minutes. Let's say 10 minutes. All right, for the live trading session. Thanks for watching. If you like what I do, please consider to subscribe and like this video so we can grow the channel. See you guys in a little bit. Thank you.